Good morning, everyone. It is a brand new month. Hope everyone is pushing along through this year. 2025 has been a great year. It's that year of change, it's the year of reconstruction. I truly believe that it's the year of finding exactly what you want and pursuing it, even if you don't know all of the steps. And for me, I have been in a wrestle match with myself mentally only because there were so many things that I wanted to do. And it's been over the course of several years where I was trying to figure out what was going to work, what would have been best for me, and even listening to other people, family, friends. You see a lot of people succeeding in so many ways, in different ways, and it's not so much as to what they're doing, but I think it's that sweet feeling of men accomplishing something and being on the other side and seeing that change. For me, one of the things that I'm learning here recently is everything that you want, you have to go figure out for yourself. So, that's my morning spill for the top of the week. I apologize if you're seeing this video on a Monday. I had to get me some rest yesterday. Um, It was a pretty long weekend knocking out some projects here. But enough of that. Let's go ahead and dive into today's review for the week. You know, if you follow me on my personal page, official trade like ace, you'll be able to see in my story where notice here we're on the weekly time frame. So each candle is going to represent a week's worth of trading price action. This one candle here just opened up on the week for Monday, and then this was all of last week. So if I can give you perspective of what we're looking at, this is what the week was looking like, right? Before we actually saw this huge move down. With that huge move down, it came with understanding the price structure, what price was at the time, and then um, watching it day by day over a few days, right? My focus is always going to be weekly profiles when I'm trading futures. This helps me keep a milestone or a shorter distance to an objective that I reasonably can hit with enough efficiency to anticipate profit, right? Or to see my trading plan out, right? There's different ones that I have for higher time frames, smaller time frames, but for the weekly profile, we're basically looking at the next 5 days. Okay. So we were able to shape everything here up, basing on that understanding that we were at all-time high and our levels that we wanted to see as far as next delivery were within this range. So as you can see here, we have low week, last week's low, and then we had the last week's high here. This was that Sunday open price that opened up that week, and then we saw what we see here today, where price did ultimately run up, and then it ran all the way down between these last candles, one, two, and three. Okay. The power of three, I feel like has two different viewpoints. You get the last three candles, right? And you have the three candles where you have the left and right of them to determine whether you have a high and low. So, for example, if we were looking at one, two, three, this candle being the high, this is the left candle, and then this is the right shoulder. So, there's the three candles that we have in that context. So, the objective of the Sunday overview is for us to get an idea of what is the ultimate objective for the week. At the same time, I always like to uh, draw levels. I like to see what was taken out, what still uh, needs to be addressed, and where do we currently sit within price action. Okay. Now, a lot of these lines that you see here, again, if you go back and watch my story, then you will see how we develop these levels over a period of time. So, what I'm going to do is I like to give myself a fresh look, even though some of these might still be relevant. But one of the things that I've learned is you have to deal with what price is doing now, not what you anticipated or saw in regards to what took place when you missed the opportunity, right? Because what's going to happen is you're going to be sitting so um um you can be very adamant on wanting to complete that objective. So an example would be notice here, this red line, right? Let's just say that this was our target at one point in time. Now your focus could solely be here, but then without realizing the storyline of what the higher time frame is actually telling us right about now. So what I like to do is I just literally reset all of my levels, and I keep the ones that I have marked in mind. This right here is another example. This was placed here based off of the what was it, the 2 hour? What's that? Did I use this? Yeah, and the 2 hour time frame. When we were looking at price, when it was like this, right? This is what we were looking at um going into the following week here. We had this level, which was the order block, right? Because price ran up and then we took this last down candle. We came back in towards the 50% and then ran back up. And then when you look at what price has done according to the rest of the days, it consolidated and then we gapped up on that new week. So this right here started the new week of last week. So as we look at what price did here, price stayed above that last week high, dipped down a little bit, pushed back up, took the liquidity on this side, came back down, and then we swiped liquidity on the sell side. So we had a range price that if we're looking at, we had this range here. Let's see if I can get a solid line. There we go. We had this range here, and then we had the bottom of this one right here, right? So what price did was, if you notice, right, price ran up, took that side, took that side, pushed here towards the end of Wednesday. And then what happened was when pre-market opened up the next day, it pushed up again. And then when price opened up 9:30, it ran right through that and stayed here at this fair value, right? And then when we opened up on Friday, Friday never came back above to retest this area or anywhere here, and we just flushed pre-market, and then we pushed down into this last part of the range towards the low of the 3 weeks that we were looking at between these levels. So between the last week's high, the low, and the low part of that range. So notice here from what we were, every level was touched, and see how we barely grazed this. So this is at 780.25. The low of this candle at 2 p.m. was 788.25. 8 points off from the low. Now we are in a bearish market right now. Notice how we have that change of structure going on here. And then we broke down. Every time we uh, see a shift of structure, you want to follow that until it breaks structure again. So here, technically, we can't call this a structure break. So we are still technically in a bear market right now. Why? Because the last down candle has not been overtaken by an up candle, right? So if you look to your left, you keep looking to your left, right? We know that this was the most recent price action, right? A key rule of thumb: higher time frames, lower time frames. You always want to look at the last 1, 2, and 3 candles, right? So when we look here, the last candle that was overtaken was a high candle by a down candle. So that right there signified that we were definitely in a shifting market. So until we see, this is a daily candle, we could very well much see it on a small time frame, but from a daily perspective, I am not bullish, right? We can't see price run up and test levels between here. Why? If you look here, this right here is an order block, right? This up candle taken by this down candle created an order block. Okay, it created an order block. So this order block, this, well, there's two areas that I'm looking at that can be anticipated. I'm just gonna remove these visuals so that it throw anyone off. Right. Another key thing is when you're marking these levels, think of if you were in the military or if you were in the army and you were responsible for coordinates, right? And communicating this to your team, right? Well, fortunate you are your own team. So that means that everything that gets communicated, um, is between you and your thoughts in your heads, right? So, but as you're journaling, as you're documenting, or as you're shaping up your trades, to help validate your setups, you are going to want to notate these. Plus, it's easier to keep these on your charts while you're trading, so that way you don't keep them in your head, or you can just write them down on a paper. I'm a visual person, so I like to write things down. So I removed a lot of those in between lines. I like to keep the solid lines for my higher time frames because there are small setups that I do take within each of these candles. So here we had, let's see, let's do this. Let's go here. This gray shaded area, I believe it was here because we had a gap somewhere. Let's see. I think it was on monthly. Let's see. I'm gonna recall why I put this here. Specifically fulfilled it. Um, See, then that's another thing. You don't want to just be randomly drawing things on your charts without actually writing them. Sometimes I forget. I know it was a very major important level, but let me see where. I think it might have been the 4 hour. Each time frame, you're going to see different setups here. right? I don't know. I know that we pushed through it. So my thought process right now is that we've completed um this entire gray shaded area. I want to honestly see what was I looking at when I did this. Oh, I think it was the daily. Was it? Did we took the low and the high? Yeah, that's what it was. So I took the three candles here. It was one, two, and three. And I did the low to the high. And then I went inside to see what that equilibrium was like and what was going on in here. So, but this has been achieved simply because we ran through it. Now, it can be retested. I'm going to use the gray shaded area as a form of retest, simply because we ran straight through it, and I feel like it's going to use a smaller objective. So I took that out the way, but let's do this. If you are familiar with TradingView, um, there are several tutorials online. Plus, we do offer you the ability to learn more about how to use these tools inside the Gladiator Trading Society under our recruit program. Stay tuned for that. We are launching it. So if you ever wanted to learn more about trading, you need help setting up your full trading desk, getting started to take your first trade, we can help. But in the meantime, hopefully this information is giving you some insight and some edge, or just to kind of get a good feel for what to anticipate. Everyone does theirs differently. I'm very technical, so and I'm very contrarian. So my thought process is going to be a little bit against the grain most of the time, or I'm going to try to question everything and oppose it. So here we are, where now I'll remove those levels. These are no longer valid for me for several reasons. Simply because we came through them. Now, if you take your attention to the right side, you'll notice how we created this long black candle, and how there was no back and forth in this area. So they are, in my opinion, going to come back and retest it, and they could utilize this as some type of inversion, or they could utilize this as a retesting. But for me, when I get to the point where I see that they are possibly trying to unload and then take the market elsewhere, then I'm going to be mindful of here versus here. Okay, so this order block, I can remove that. This fair value gap, I'm going to remove that. Okay, right? Because that has already been completed. When I say completed, meaning that price ran through it. Notice how price was up here, up here, up here, and it ran up, but it never came back down here until we saw it run down here. So that closes and completes this as balanced price. Now we want to now create the ideal of seeing where the last price action was. So before I do that, let's go back to the higher time frame from the weekly standpoint, and let's readjust our viewpoint to see where we are. This right here was the one, two, three candles. Okay. Now we haven't taken out this low, so but this was July. So let's look at it from here. All right. So we got this is the month. I want to see how we can do it. Right. I'm coming back to this higher time frame. I do feel like we're going to go lower, but what I want to try to do is figure out how do we incorporate this weekly. Because it's not no longer the low of the 3 weeks. Because this was one, two, three, right? And in June, this is July. So you say the low of July on this one, the low of last month, the low of last month, which would come off of that last candle, right? Because as you're trading, you're gonna use these as references, right? Low of last month here. So that lets me know because we're in a brand new month. So my mindset is no longer looking at it from the last 3 weeks. I have one, two, three. The last of those three candles have been taken out. Is that an objective for me? No. So therefore, when I look at the low, these candles, one, two, three, this is the low. So then the last week's prior now goes from being here, the last week low, to being here. And the low of this candle is 788.25. We're just gonna go ahead and coordinate him up to 7 right there. Now we have two major levels that are now an attention for our next grab of liquidity, right? Because we grab liquidity here, and then what happened? Price push back up, right? So that move has already happened. It did it overnight. We ran up 100 and roughly about 80 points. You know, also play between two levels. So our two levels. What we want to do is create a range. But before we do that, let's continue with these adjusting the lines. This one was prior week's high. So last week, I always do prior week is like you got last week, then you got prior week. So that's like 2 weeks ago, right? Prior week is like 2 weeks ago. We have last week's high here, which is no longer here because it was taken by last week. We actually opened up above it, and then we came down back into it. So the last week high is actually here. The high was 848. And when you hear me saying the digits in 3 digits, I'm referring to I'm not counting the thousand. It honestly, one of me and my colleagues, we just every time because we see price moving so much, um, it's just it's easier to just call out 848, 800, 700 versus me going 23,848, 23. When we switch between the thousands, then we're mindful of that. But anytime we stay within that range, we usually are just going off of the last three. All right, so that's just something that we do, not nothing particular. But when you hear me say like 848 or I'm pointing at a number, I am my mind is also reading that it's 23,000. So this is the high of last week. This is the low of last week. So what does this mean? We are now in this particular range of the week. That's how it gets shaped up now. So meaning that that's that. Now prior week, which is this week. This is prior week, right? This prior week's high. This was Sunday's open. This was the Sunday open of last week. And then we can say the Sunday open of this week will come down here. But before we do that, let's do that prior week. This is prior week. Prior week high is here. All right, so this is the high, which is 477. Let's see. I could have typed it in, but I'm just 477 even. Boom. So that's that last week's high. Now, the low of that could be considered, or the open could be considered. This is a Sunday's open. I like to use on the weekly uh levels. The highs, the lows, and the weekly opens are usually strong areas of direction. So here on this one, if we looked at it, I'm gonna put that line here, and then I'm gonna drop down to like the 2 hour. Well, hold on, let me see something. This week was Monday the 21st. So let's see, the 21st. So we can go back here. This was Friday, Monday the 21st. Okay. So here, delete that. Okay, so this was Sunday, Monday, Tuesday. Okay, so no, this was Sunday. Okay, so the opener of this one On Sunday, 240. Let's go here. 240. All right. And then I'm gonna put prior week, Sunday, open. My opens, I like to make them purple. Cool. All right. So it's prior weeks. This is last week. And I have to be mindful when I'm doing the weeks because I can put Sunday open and Sunday open, right? And then if I start trading up here, right, and notice I can't see anything to the left, you know, in the midst of the moment or my mind might just look at this and say, oh, this was last week's Sunday open, but it wasn't, right? So you do have to keep in context where those weeks are because price is going to play within them and then go to its next objective or direction. So that's prior week, that's last Sunday's week. So we have two Sunday opens here before we get to the high of the week. And already I'm looking at this as being a very useful area or level, especially when I start to get down to my candlesticks and my directions of what's going on in these areas. Um, so there's that. So we got last week, we got prior week. Let's go back to the weekly. So we got the last week, we got prior week's high. We got last week's high. We got last week's low. If we do prior week's low, I think it would be ideal because it's within our one, two, three candles, and you want to do the high and low of each one. Um, in accordance to what makes sense, right? So like if these were in any other form, we would look at it in a different way, and I would show you. But what you see me pointing out, um, they're not always used, but in the context of if I'm looking at one, two, three, then I am covering the idea of where price would potentially want to run to in the sensitivity of that candle. So because the sensitive areas of each candle are always going to be the high, the low, and the open and the close, then I'm looking at where does that play within the storyline of what price action is doing. That's why, automatically I know because I've done it 1,000 times, but I point it out for your notes and for you to study and to figure out why and then to question that and then to every time you see price when it does pop up, how does that play a key role, right? Because it does matter, and it's not that it would use it or that it would respect it, but if you're testing or you're trading your trading plan, if it's a tool that does get used in your model, you just keep that in mind. Other than that, forget what I'm saying right now. Now this is the low of the prior week, and that low is 105. Did we hit it? That's 108. We were close. Sometimes I can just drop the pin and be right on the money, but we're not that far off. Boom. So that's 105, and we're gonna make this line blue, and we're gonna put this prior week low. Boom. So now we have our prior week, our last week, and then if we look at the low of the last week was technically the low, but we're gonna call the month here the low, the 780.25. That's the low. All right, so this is the low, but then the next low falls within this candle, right? So this would be the next objective. But at the same time, if we look at our three candles, right, why am I going backwards and starting to look down? Because when I look up, there's no other price towards this way, right? We already hit sell side objectives. So if I was to uh take your attention, I'm only taking your attention to those last three candles. That's what I did when I was doing this breakdown, but I'm only taking your attention to here. There's many other things that I can see and I know what's going on, but I'm just thinking if I was asked the question, why would I no longer be looking for prices uh, upwards? Simply because the last high candle was taken by this down candle, and that created the market structure. That was a break of market structure. So can price keep going up? Absolutely, right? But if we were to look at a situation where, let's say right here, this was the last high that we had, right, which was in December, and that's been objective. I think all the summer was to hit those highs. So here we have the high. This was 867.50. Let's see if we can just edit that a little bit. Let's just go to 867.50. Mm, 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 mm. What I'm gonna call this is weekly buy side. It's a higher time frame. It is buy side liquidity. And that was the big push, in my opinion, that we saw when we were up here. We were above there. We came down a little bit, and then we pushed up. And now, ideally, we want to come back to a weekly sell side. So if our delivery has already taken sell side, I mean buy side, what will be the next objective? Sell side, right? Now, it took us, these are weeks. This is these are weeks, right? This is April, April, May, June, July, and now we're in August. So May, June, July, August. So about 4 months. It took us 4 months just to get to this buy side. Now, this is where time becomes fractional and your objectives have to be one that matches the timeline of what's going on, right? Because yes, this is buy side, and I learned this because I would be so fixated on the idea that I had to just stick to one bias, but the market literally flips and changes every single day. So you have to know and anticipate when would be ideal for us to even consider which side of the market that we're on. But in this case, this was the last high. We are now above it, and we literally could just be bouncing above it until market news come in or the right time of the day, and then it just dumps. It's not going to just automatically take out 4 months in one setting, right? But when you're setting up your plays, you're setting up your levels that are important. You want to keep these key levels in mind because they do become a point of reference while you're trading. All right. So, but notice, right? We just incorporated this line, and notice how price has been using it for a while. Now, if we go down to the monthly, notice here, the price in these levels. What's the open of this one? 866.75, 867.50. So it's button up on it. What was this price? This was the close. The close was 865.75, 867.50, right? So 2 months close and over. Have you utilized this particular level that we brought our attention to? So now here, price did open up above here. Then we wicked down and then we came back up, right? So what I'm looking at, I'm going through the different time frames because I'm etching and sketching out potential areas that have not been touched. That's all I'm doing, right? I'm not I'm not looking for any retail patterns, bear flags, or none of that. Right now, all I'm doing is I'm just setting up the playing field, right? Giving myself the visual Um, let's see here. It did that gray area. It was something similar to this. But what I'm gonna do is I'm actually gonna make this area yellow because this right here from this candle closed with this candle running up and then this candle opening. Notice there's no other price ran in here. This is called the fair value gap. All right, so this is monthly. This is a monthly fair value gap. I don't have any monthlies on here. So what I'm gonna do is I'm gonna put month fair value gap. Because as you can see, I switch through different time frames. If I don't put the context of where I am looking at it, then my brain is probably going to treat it according to how it feels, and that's not how you want to trade. Just lighten him up just a little bit. One or two yellow. All right, so that's the monthly fair value gap. This is potential, right? That's one fair value gap. And when we look here, we can say that we have another fair value gap, but I don't want to attack that one right now. I'm only looking for weekly. This is a month. This is one, two, three, right? So now if I break it down to the weekly, do I see another fair value gap? I see a weekly fair value gap that could be used. Plus we got this um liquidity here. And if you notice here, right, this is not an order block. Right? Just because this candle got taken, we're not, this is an order block. The order block is the last down candle. Oh no, sir. I apologize. This was used as an order block. Yeah, the last down candle, but that's from a weekly standpoint. All right. But if I look at it, I wouldn't use this. I personally wouldn't use this order block. Right. It's a good reference, but for me, I primarily will want to focus on the fair value gaps and the high and lows for right now. So let's see. I don't need to bring it out that far. Here's good enough. Right. This is an area I think we can see. Let's see. But these are weeks. These are all weeks. Let's go to the day. You see here. This. If I look at it from here, yes. Because watch this. I go to the week. This creates an order block from a daily standpoint versus if I do it here. All right. Let's go back to that daily. Notice how I might have to go down to a small time frame to see if we have any significance going on. I do like how in this area we have this level utilized, but I personally don't don't want to give myself too much attention to that. Let's see, back to the daily. So weekly, let's see. So we do have the ability to see price run up and then run down. Price can come back up into this area to retest. If it runs up, retest, and use this as a support, then we can see price continue. However, when I am assessing price, I don't go all in on a bias one direction. Not at least anymore because it doesn't help, especially when you need to adapt to what's going on. We are in a bearish structure, so any pump, I would want to wait for it to set up and then get into the dump until I hit these lower objectives. This area right here can potentially be used this week. We only have 2 days where we got some news sentiment. So everything this week could potentially just be technical trading, based off of price and where it needs to be delivered to in that given moment. So right now it is 7:35. So far, we've set up some good lows. Let me just go back to the weekly. Because again, the Sunday idea and objective is for us to just get our levels, and then each day we show up with the idea for our plan to plan accordingly. So for now, one of the other things that we also have to take into consideration is if we look at it from a candle standpoint, the high and the low. This candle is inside this particular candle. We are playing with the wicks here. So for me, I don't think we should see too much consolidation simply because we did open below this candle's close. So it could be reaching back in, like if we were to do a Fibonacci retracement and take that from the high to the low, that open and close. All right, wicks are cool, but sometimes when I do my high and lows, I like to utilize it for the candles. And if you take your attention to the right, you'll see that these are the Fibonacci levels and the extension. So it'll be 10755.25 and 0, right? So that's the range. And then negative zero point 0.5, negative 75, and negative 1. These are the extended levels that price would reach out of based off of this retracement. So we've already retraced from the low of this one into the 25%. Now let's see what would it look like if we were to use a high and low of that the day. Let's see here. Let's say 25%. Right, we could be a little off because this is where they wick out traders. I like to use where most of the volume actually took place. What this does is it gives me a better idea. Notice how the further extension here, that one is on that fair value gap. So this long term, meaning a couple of days, probably 2 weeks. Um, my intention is for me to set my risk accordingly for us to see this happen. But until this happens, we want to see the sell side, the buy side liquidity objectives get taken first. So there's two things that we have here. We have this order block, and then we have this fair value gap. The fair value gap could be reached back into before it runs down. So this is the daily fair value gap that I see here. And then we have an order block that runs here. So we call this the daily order block. Right, so I'll move these lines and then boom. So two things that we could see happen. Well, several things. I mean, it's like you truly never know until you really get into the mix. Price is here. We can see price, you know, completely reject this price low and then run down and do what it wants and then keep going. You have that as an idea. Um, Price could run up to this Sunday of price, come here, and then keep running down if it wants. I'm just giving you bearish ideas until we break above this candle, um, and close. We can't say that we are bullish. Right? Price can just keep running up to here, maybe come here, hit that 50%, and then still dump down. Or price can literally run up to that order block. Run up. It's different things that it can do and run down. All right, so just one, two, three, four. Four bearish ideas alone could potentially come out of this particular transaction, but we want to be very patient, especially when we don't have a lot of news. We had a huge week at the top of the week last week, with that long down candle, and again, prices could very well much be trapping traders that want to go short, and it can literally just eat all of that up. So that's my spill for the overview for today's Sunday's breakdown. If anything I've given has helped, drop a comment below. If there's anything that you would like to see or you have any questions, I have other things that I do in the morning. I personally just don't want to overload this video. I just want to give you a point of view when it comes to what price is currently doing. Stick around. I will be doing a breakdown each day to just give you an idea of what has taken place and how the narrative has shifted, if anything does shift. But in the meantime, trade safe, trade well. I know I probably didn't mention this, so if you stayed to the end of the video, my breakdown was on MNQ, which is the NASDAQ. Not so much as the MNQ or NQ, but that's what I use. The ticker that you see here, it's just the micros, where I'm able to trade less, but still trade the NASDAQ. I primarily focus on the NASDAQ. If you guys would like to see any other overviews, leave a comment below, and I will make sure that I include it in my next weekly review. Until then, trade well.